Good afternoon, everybody. Welcome to the day 26 of our 60-day trading challenge. And today, as you know, was a weekly expiry day. We had expected a bit of volatility, and yeah, indeed, it was not too much of a volatile day. But however, being sideways market, also like at the end of the day, the Nifty hardly, or rather, it stayed where it was. However, indeed, there was some volatility during the day, and it. We ended the day in a loss. The peculiar situation was normally on a in a normal day, sideways market would have helped us to in terms of premium decay. Particularly today, put side premiums were not eroding much. So the call side still there was some erosion, but the way the decay happening on the put side, it was little not so usual. It was not decaying much. So we that which also meant that we had sold the put. We did not decay much, although the market remained in the sideways. So we ended in a minor loss. So I'll just walk you through the trade. So as you see here, this is the Nifty chart. We entered somewhere here at 9:45 our trade setup form, and we entered in selling the put, which meant that the market was, as per our strategy setup, it was to go up. It indeed went up for a while and then came back and then went up and again came back to the same level and went up and so on. So if you look at uh, the premium chart, so this is a place where we sold. As you see, the market indeed went in our favor and again went up a bit. The again came back to the lay or below our sold price, and it was so till say around 1 o'clock. And after 1 o'clock, there was a slight bias towards the upside. So if you see so much of a time elapsed during the day, but the decay was not much at all. Like we had sold it at 79.15 here, almost near to that level. We exited at 85.30. That means hardly there was any decay. Rather, it was slightly it got added here. So that is where we incurred a loss. And the most peculiar thing happened was post our exit, the market, the premium shooted up pretty much higher than. Then anyway, this is not relevant to us because we sold here in this candle itself. So our entry price was 79.15, and the we had initially put 118.75 as our stop loss. And of course, till 130 or so, the did not hit the stop loss, and it was still in at around the level at which we had sold. We started trailing the stop loss to day low. Post our taking the trade, whatever was the day low, and this was the day low candle. So we sold the day low as you hear 72.05, and based on that we trailed our stop loss to 108.10, but it was not relevant for us in the last minute. It hit here, but we had exited before that here itself. So if you look at the our trading journal, so we had sold 23,800 put of next week, not this current week. So big because today being the expiry day, as I explained in multiple earlier videos, we sell the next week's strike price. So we sold it at 79.15 and then we covered it at 85.30, and we incurred a trading cost of 58 rupee 40 paisa. So which means we incurred a loss of 519.65, and our confidence level was not very our conviction was not very high today because there was a bit confusing, as you see in the Nifty chart also. There was a kind of a volatility we could see. It it opened up here it is. So it opened a gap up, and then after the by the time we could sell at 9:45, there was one candle which was coming down also. So our conviction in overall looking at the open interest and various other data was not very high. So that is why I've taken rated as 3. So anyway, the more details are provided over here. And at the end of the 26 days, we are at 10.54% ROI. Our equity curve still going strong, although the mild dip today, but we are still going strong for the day. Tomorrow is a market holiday, being May 1st is a holiday. So International Labor Day, so we have a holiday tomorrow. So see you all day after tomorrow for the 27th day, and thank you for your time and your support. And catch you up on Friday. Take care. Bye bye.